Environmental, social, and governance, or ESG factors, are a significant consideration for investors today. And here at Neuberger Berman, we're deeply committed to thoughtfully integrating ESG across our broad investment platform. As ESG investing prominence grows, governing bodies around the world are building regulatory frameworks to promote transparency and safeguard investors. Nevertheless, there are plenty of skeptics. Investors may worry that they will compromise potential returns for the sake of ESG, but at Neuberger Berman, we reject that notion, and my guests today are here to explain why. My name is Anu Rajakumar, and joining me from London are Sarah Peasey, Head of European ESG Investing, and Jeroen Brand, Portfolio Manager for the Global Sustainable Equity Strategy, joining me from The Hague. Sarah, Jeroen, thank you so much for joining me today.
Thanks, Anu. It's a pleasure to be here.
Thanks for having us, Anu.
So as I've mentioned, ESG has grown tremendously over the last few years, but let's step back for a second and talk about how the concept of ESG investing got started and how it evolved to where it is today.
Yeah, absolutely. I'll take it from here. I guess using the idea of history and ESG in the same sentence, I think will come as a surprise to a lot of people, given the prevalence that we've seen of ESG more so in recent years. And it feels like a relatively new phenomenon to hit financial markets. But I guess the reality is it really isn't. I think ESG has broadly always impacted how we invest and manage capital, particularly when you come at it from a G perspective, so the G of ES&G investing. To actually invest in a well-governed company with, say, like a very stable management team is ultimately fundamental to the long-term sustainability of any capital that we manage. So conceptually, ESG as a tool is not new. However, what has changed, of course, is the labelling of product. And I'm sure many listeners would have come across SRI investing or avoidance screens in the past. And these were all very early manifestations of ESG. And Neuberger Berman themselves, in fact, we actually applied avoidance screens all the way dating back to the early 1940s. But assets in ESG product today have absolutely soared. So I think today we're standing at about 35 trillion, and that accounts for nearly a third of all the assets that are managed professionally from a bank and investment fund perspective. So it's enormous. And the increase in product can be highly correlated to the prominence in a lot of these big global challenges that I'm sure we're going to be discussing today around climate change and net zero and the UN Sustainable Development Goals even. But if we just look at climate alone, there is something like 800 purely climate orientated equity funds globally now, which is an absolutely staggering number. So you can understand why this has led to greater regulatory scrutiny. And I think it's fair to say that the regulation is never necessarily an initiator of change, but it's often a tailwind when it comes to historical shifts or even like events that impact the financial sector. And this is exactly what we're seeing now through the likes of the Sustainable Financial Disclosure Regulation in Europe, or SFDR, as a lot of people more commonly term it.
Yeah, perfect. Thank you very much. That's very helpful. Good overview. You mentioned, Sarah, greater regulatory scrutiny. You mentioned SFDR, one of the European mandates coming through. And as I mentioned in the opening, a number of governing bodies around the world are really trying to figure out the right frameworks for ESG practices. So maybe if you could expand upon that, Sarah, tell us a little bit more about these regulations and what adjustments you think could come of these changes to policy.
Yeah, so look, if we just focus on SFDR for the moment, and this actually started to really gather momentum back in 2018, and the EU first laid out the Sustainable Finance Plan, and this had 3 pillars. The first one was to reorientate capital towards sustainable investments. The second was to manage financial risks associated with climate change, so the likes of stranded assets. And the third was to foster greater transparency and long-term investment. Now, there's been various pieces of legislation that's dropped off of each of those buckets over the years since, but by far the biggest has been SFDR, and possibly it's one of the biggest pieces of regulation that we've actually seen in the financial sector more broadly since the introduction of MiFID II. So SFDR sits in this last bucket, as I mentioned, around transparency, but there are another 2 components that we do have to mention that sit alongside SFDR, and that is around corporate sustainability disclosure and also the EU taxonomy, which many listeners may have heard of. But how is this affecting us, I guess, is the most important question. And the purpose of SFDR is this idea of greater transparency. And what is going to come out of that is more reporting, for one, but also this idea of product labelling. And it's currently only affecting products in the EU, ex the UK, but products are being accredited with a designation, and this can range from an Article 6, an Article 8 or an Article 9. And Article 6 being a fund which isn't promoting ESG and so couldn't be necessarily considered sustainable. Then you've got Article 8 where it incorporates a more binding element of ESG into the decision-making process, and that's where a lot of product is now sitting within the EU. And then you have Article 9, and this is where there's an actual explicit sustainability objective being built in. And asset managers more broadly did release all of their designations earlier this year. And as many listeners have probably seen, it did provoke quite a lot of media scrutiny. And there were accusations of greenwashing that has been branded about. And I think that was inevitable in many cases, because this ultimately was the first attempt by any regulator globally to even put a label on sustainability. And we haven't even seen yet what the SEC in the US is planning to do. So there are going to be bumps in the road. But I don't think we can lose sight of the purpose of SFDR. And as I mentioned at the start, this was to foster greater transparency and consistency to support end investors' decision-making.
Terrific. Thank you very much. Sarah, you touched on some important topics here. That the regulation, this is about transparency, better reporting, avoiding greenwashing, etc. Jeroen, maybe to turn it over to you now, you're a portfolio manager on the Global Sustainable Equity strategy at Neuberger Berman. Your team has been investing with this ESG lens for a long time. What have you done over the years to change or accommodate this growing interest and focus on ESG? What are some insights from your position as a portfolio manager?
Yeah, well, as you say, we have been doing this for quite a number of years. Our strategies have been around for the better part of 20 years. And I think our approach throughout the years has been roughly the same. If you have a very strong competitive position today, but you're not able to change also to societal demands, then ultimately it's going to impact your competitive position. So it's always been core to what we do. But of course, there has been involvement in terms of the data that we have available at our fingertips. In the past, it was more about just exclusions or ESG scores based on policies. But in recent years, you see that those scores are also taking into account company exposures and how they manage those exposures. And from that perspective, the data has already more come to how we look at the world. So from that perspective, it's becoming more aligned. In terms of transparency, what the regulation is all about, reporting and transparency, I think it's also quite helpful that a cornerstone of our investment process is company engagement. So even if the data might not be available, just by engaging with companies throughout time and see how they develop in terms of how they manage their company, that already gives you a lot of insights in whether they really mean it and really want to be sustainable.
Jeroen, you mentioned engagement, and we've spoken a few times about the need to avoid greenwashing. Would love it if you could just share an example of an engagement that your team has done and maybe some of the outcomes of that engagement.
Sure. Yeah, greenwashing is indeed if you label a product differently from what you're actually doing, or if you want a certain sustainability label and suddenly you change the way you operate. And indeed, engagement is a key aspect to find out how sustainable a company is indeed operating. A recent example is, for instance, that we spoke to a salmon farming company from the Faroe Islands called Bakkafrost, which is a medium-sized company. So they didn't have a lot of resources to do a lot of reporting on ESG and sustainability. But by engaging with the company, we did know that they were operating in a very sustainable fashion. And of course, that's also crucial to their business model, given that you're growing a natural product. But we also stimulated them to start reporting more on it. Since we engaged, the company did start issuing an ESG annual report, and they also hired people to specifically facilitate the reporting on ESG aspects.
So if I could just add to that, in recognition of the crucial role that engagement actually does play, last year we launched our MB Votes initiatives. And through the initiative, we actually publish our vote intentions in advance of select shareholder meetings. We think this is really important to give companies the sight ahead of our vote as to what our concerns are with regards to specific votes, and allowing us to share our analysis and expectations on a variety of matters is ultimately what we wanted to do and vitally important. So very much we recognise the importance of engagement to our clients in really seeking to get this additional layer of granularity and see where engagement ultimately is adding value with their investments.
Fantastic. Well, thank you very much for that, Sarah. As we start to wrap up here, would love to get your final thoughts on what you think the outlook is for achieving the goals that have been set out for these regulations. Is this feasible, achievable? What work needs to be done? And do you think that investors globally are really on the right track?
Yeah, so I guess if I just focus on net zero by 2030 in this instance, and of course, achieving this goal is hugely aspirational, and it's going to require substantial changes across the global economy, which ultimately filters down to investment solutions that we manage. And this will be a challenge from an investment perspective because there is no historical precedent for climate change. And the modelling that we are working with is definitely going to be sensitive to assumptions that are going to change in the near future. But of course, where we are today and where we will be in 5 years' time will look very different. And arguably that the abrupt shutdown that we saw of the global economy over COVID gave us an insight into what a disorderly transition could really look like. And we saw the price of oil plummet and the world was ultimately grounded. But it's going to be a very long journey and there are going to be some real hard yards ahead. But the recent introduction of SFDR and the imminent rollout of the taxonomy, in my opinion, I think will only galvanise how we're able to quantify climate risks and further allow investors to properly discern how they want to allocate capital. But undoubtedly, the asset management industry has such a pivotal role to play and a huge responsibility really to get this right. And one, for me, I personally feel very privileged to ultimately be a part of.
Jeroen, what about you? What are your thoughts on the ESG investment landscape going forward?
I think, as I described, our approach has been roughly aligned with where the regulations are moving to. And I think the big challenge will be more on the data side. There's lots of targets being set and reporting requirements will come, but ultimately it's dependent on the data availability. I think we can be confident, given our quality focus, that our holdings will stack up pretty well if we get to the reporting phase. But having the data available will be key there.
Terrific. Thank you. Now, I do have a bonus question for both of you. How do you incorporate sustainability into your own daily life?
Great question. And actually, it was something I did recently look at because I've obviously recently joined Neuberger Berman. So I was consolidating all of my pension assets, and it was an opportunity to actually see what I was really invested into. And I did take the opportunity to reallocate to some sustainable funds. So yes, it's something that I've definitely been looking at from a financial perspective, but more personally, my husband gets frustrated with me on a daily basis when I'm taking things out of different bins and putting them in other bins just to make sure the recycling is all in the right place. So yeah, look, I try to walk the walk and talk the talk, but look, nobody's perfect, right? And I don't want to pretend to be.
That's great. I know I'm the same way with making sure everything is in the right bags. What about you, Jeroen?
Yeah, well, in the Netherlands, we are also quite fanatic about separating garbage. But on top of that, I had the privilege of starting to drive an electric car pretty early on. So I've been through all the range anxiety, just being able to drive 100 kilometers and being really conscious about where you go and when you go there. And still drive an electric car, which has a much wider range nowadays. So that was my contribution, I would think.
That is terrific. Thank you very much for sharing some stories there, and really just for all of your comments on what was a really terrific conversation. I do hope that our listeners take away a better understanding of where ESG investing has come from and what direction it's heading in. So Sarah, Jeroen, thank you very much for joining me today.
Thanks, Anu.
Thanks, Anu.
And to our listeners, if you like what you've heard today on Disruptive Forces, you can subscribe to the show via Apple Podcast, Google Podcast, or Spotify, or you can visit our website, www.nb.com/disruptive forces for previous episodes, as well as more information about our firm and offerings.
This podcast contains general market commentary, general investment education, and general information about Neuberger Berman. It is for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. This communication is not directed at any investor or category of investors, and should not be regarded as investment advice or a suggestion to engage in or refrain from any investment-related course of action. All information is current as of the date of recording, and is subject to change without notice. Any views or opinions expressed may not reflect those of the firm as a whole. This material may include estimates, outlooks, projections, and other forward-looking statements. Due to a variety of factors, actual events or market behavior may differ significantly from any views expressed. Please refer to the disclosures contained in the episode notes and episode details, which are an important part of this communication. Investing entails risks, including the possible loss of principal. Past performance is no guarantee of future results.